Hello, all. Welcome to episode 44, double four of Stock Talk with Josh and Nico. Nico, how you doing?
I'm doing good. I'm having a lot better time in Florida than I am in Indiana, so I'm happy.
The weather out here hasn't been that bad.
The weather?
Yeah, it hasn't been
Yeah,
that
I
bad.
saw it. It's been like in the 40s. That's not that bad for January, to be honest.
I know, right? I think now it's just raining now, but it's been
It's
like
not. It's
40.
not as good as 75 and sunny though.
Yeah, but you can save a little bit more money though.
It's not bad.
Yeah, but we are doing this on Zoom. Well, not Zoom, but Google Meet. Rather, you should say. But we do have a guest today, Nico. And Nico, would you like to introduce our guest?
Yes, our guest today is Zain. It's me and Zain have known each other for a couple of years, but we have not talked in a very long time. So I'm very excited to have him on the show today, and I know he's a very smart guy, so he's going to have lots of interesting opinions. And with that being said, let's get into our first topic.
Welcome to Zain.
Nico, Josh, thanks for having me. And
thanks for coming by, stopping by.
I apologize, I can't be in the studio. I mean, currently I'm in Boston. Yeah, just the weather has been just insane. Right now it's 30 degrees and it's raining, not even snow.
Mm-hmm.
We have to go to Boston in the summer, something like that.
Yeah, I mean, Boston's like one of those places where there's only two seasons throughout the entire year, summer and winter. But recently it's just been insane because we're not even experiencing winter. Maybe because that's due to global warming, or maybe that's just due to the shift in the northeast weather. I don't really know. I don't have an answer for that.
Real quick, I'm not sure if Nico wants to bring anything up, but before we started recording, he said something about a startup. So,
yeah,
let the people know a little bit more about your startup and what exactly do you do, like on a daily basis.
Yeah. So before we started talking about this and going live, Nico and I were just catching up, and one of the things I've been up to in the past couple months is back in 2017, I had an idea for a drone delivery startup. And basically my mindset was combining existing and emerging technologies together to create something new and innovative into the market. So, for the past 5 years, I'd say there hasn't been any real progress going on in the drone delivery industry. So, but recently I saw an article, this was back in, I want to say September, where there was progress being made specifically with Amazon's Prime Air, as well as the development of drones being able to carry heavier weights. Mm-hmm. So I was like, wow, this is probably the time to get back onto that. But my way of postponing it, I kept myself busy. I haven't been just doing anything. I was doing an extra years in my bachelor's degree, doing master's degrees, learning as much as I possibly can and getting ready for the market for when it's ready for the idea. And here I am today, now finally moving into the stages of starting that idea. So that idea is essentially, it's drone delivery, but it would be a peer-to-peer system. It wouldn't be like how Amazon is automating their carriers such as USPS, FedEx, etc. So this would be something like you and Nico and Josh, you guys can use this platform similarly to how Uber is used between driver and customer.
Oh, I see.
Yeah, that's what I was thinking. Like, so say like maybe if I don't know, like not eBay, like say I have like a package of shoes or anything I want to send to somebody, I would kind of use like what your startup like that.
Something like that, yes.
Okay.
Yes. So right now we are actually in the seed stage. Ideally, right now we have just passed the FFF part of the funding, which is friends, family, and fools.
Yeah.
There have been a few fools that have contacted me to get some equity, but I'm actually staying away from that because if someone's giving me money, they're going to want something in return, and I don't want the wrong people in my list. A big thing that me and Nico really connected with when we first met was talking about the stock market, which is something I've been heavily involved in the past 2.5 to 3 years. So that return that is coming from my return from there is going also into the startup idea as well. But I don't want to put everything that I have into the idea. I want to look for Series A, B, C funding, and then going to an angel, going to a VC eventually. Mm-hmm. But looking for the best place of where I should base it. Who the connections are in the industry that can give it.
Okay, I have a question. Do you know why? Like, because I remember years ago we talked about before that DoorDash was getting into this drone delivery business too. Do you know why we haven't seen much progress with the whole drone thing in the last couple of years?
Yeah, so that's actually what the article I read about in September was. So a big problem with drone delivery, one, it's mandated by the FAA. And the FAA basically says you can only fly drones off a certain altitude. You can't fly it over where there's a lot of people, because let's say the drone comes crashing down, the likeliness of it hitting someone goes up exponentially. And simply the technology of how heavy a drone can carry, like the weight of something the drone can carry is, I think it was like 5 to 10 pounds back in 2017. It's getting better and better and better, as propellers are getting more sustainable, as they're able to collect more air resistance and stay up in the air without dropping. That's a big thing. And being able to navigate not harsh weather. When it's harsh weather, the drone simply will not be flyable, but weather that has some sort of turbulence.
Okay, I see.
So, as the technology gets better, the idea becomes more and more feasible.
Right.
Yeah. But it's nice because, right now DoorDash solely operates with a driver of a car. And, cars, especially in high populated areas like Los Angeles and Boston, there's going to be traffic, which means, let's say you order breakfast or dinner, and then you wait like an hour, sometimes 2 hours when it's bad weather. Drone delivery, you can get it within 30 minutes or less, depending on.
And the other thing was, I remember reading about Kathy Wood and Ark Invest, and they were talking about the profitability that it would add to companies like DoorDash when they integrate the drones into their business. Because I think it's like, I forgot how much they were comparing it to cars. I want to say it was like 10% of the cost when you use a drone versus when you drive the package to somebody's house. So that was super interesting too.
Yeah. I mean, like I said, it's still in the development phases. If the technology was adverse, we'd be seeing a lot of competition across the board. But what makes my idea more appealable to my niche is a whole sustainability component. Just some things I can't disclose on this channel right now. But there are some tidbits you need to be aware of, especially with the emergence technologies of right now and what people are going to be needing in the next few years and even after that. So
why is it like, does it have something to do with renewable energy?
Something like that, yes.
Okay.
But actually more focused on plastic revolution and reducing the microplastics in the area. It embarks on reducing some of our current problems with that to create new parts and things that can be utilized into.
Well, that's awesome. That's great. I mean, that'll help with your ESG score. That'll definitely help with make your company look better.
Yeah. But I mean, in the next year or so, I plan to keep on working on the startup in the back. And then when I think that it's finally able to launch, ideally my target is to soft launch in the first quarter of 2024, so a year from now. But in the meantime, I will actually want to study a little bit more about ESG and more of a consulting background, because this is what's going to be needed going into a market like that in 2024 and maybe even 2025.
Yeah, right. Yeah. Now, what's interesting is last week I saw that the guy from Shark Tank is looking for new people to come on the show. So you have that as an option too.
For now, I'm focusing on smaller accelerators. There is an accelerator through my institution, hence why I actually joined my master's institution. But this year, the theme for that competition is actually something that's completely unrelated to my ideas. So now I'm actually going to be doing a competition, or rather an accelerator through maybe Y Combinator or another national competition.
Oh, that's cool. That's cool.
Yeah.
All right. So this is your first startup, right?
Yes, but I've had the idea for a while. But I see myself going from idea to idea. I've always seen myself as a guy that likes to solve problems to make life easier for everyone. So it doesn't have to just be one idea. It's turning multiple. But it's good experience nonetheless.
Okay, so I want to talk about like a little bit of advice for like you would give someone who's like first starting up a startup. What would you give what would you say to that person?
Yeah, I mean, the biggest thing I like to say is time flies when you're having fun. Anyone that works the 9 to 5, a lot of the people that hate their jobs, they quit unless you really love your job and you really like working for someone and, you know, being around someone else's schedule, good for you. I'm happy for you. But me, that's never been me. So following my own dreams, my own heart. And, you know, there was some influence from my father as well. He was an entrepreneur back in the day. Now he's retired. He's actually a big options trader now, but, you know, just following your instincts, following your heart is a big thing. I know that sounds very, very cliche, but again, if you really want to enjoy what you do and you don't want to be like, oh, when is this going to get over? Why is this meeting so boring? Then, you know, you need to do something where you can be behind the wheel driving the car or where you're going.
Now, what industry was your dad's business in?
He was actually in a few industries. He was a serial entrepreneur. So his first business, from when I can remember when I was very young, is a lot of computers, a lot of electronics, and then he shifted into the pharmaceutical industry. And then that was actually his last business when he sold it, and then retired or went into options trading and private equity from there.
I see. Well, that's cool. That's interesting. All right. Well, I'm ready to get into the talk about artificial intelligence because there's so much to talk about with that. So let's get started with that. I would say the biggest news recently that's taking over everything is OpenAI and ChatGPT, especially because Microsoft just invested $10 billion. I believe they put the valuation at $30 billion for that company. The controversial thing with it, though, is the fact that company is losing billions of dollars on the bottom line, I'm pretty sure. So that's where Microsoft has a lot of work to do to turn that business around and get it into some applications so that it's profitable.
Yep.
So what's your guys' thoughts?
I think, you know, even with Facebook, them going to the Meta stuff, like with Microsoft, I think a lot of those companies are going to try to they are going to take some losses, but for the future, you know.
Yeah.
Sometimes you got to take that stuff on the chin just to start building on for the next 10, 15, 20 years. But I think it'll be all right. Microsoft is going to always be here when we die, our children die, yada, yada, yada.
Yeah,
so
I think it's going to pose a big I don't know what the right word is, but Google's going to have to put in some work and catch up or come up with some sort of way to compete with Microsoft now that they have that technology.
I will say that with the whole rise of artificial intelligence has always been that thing that's been lurking in the background.
Yeah.
And has just tons and tons of potential. But now that you see these blue chip companies, these tech giants,
right? This is the year for it.
Microsoft, Google, even Apple is trying to get into it. You know, there's a lot more progress that can be made because a lot more money is actually going to be going into the development and the research of this and the utilization. And a big thing that these guys have that these small companies don't have is their niche and the amount of people they can market to try and improve their technology.
Yeah.
I think that, sorry.
No, go ahead.
I think that with artificial intelligence, you know, when it first came out, a lot of the people that the developers, their incentive for creating this was for small things like ask the ChatGPT to create you a nutrition plan, ask them to create you a schedule, ask them tell you a joke, you know.
Yeah.
But you're right. It's the same thing with the internet. It started off slow and then it just takes off to what it is now.
Yeah.
I see it rather like in mathematics, we invented calculators because we hate doing things mental math. We hate doing things by paper. It's a tool to enable us to do more and more and more at more complex levels. But if you use the calculator the right way, you could really do some crazy stuff. That can be exactly applied to the development of AI. Instead of asking it to create you a nutrition plan or you know, recommendations for restaurants, you can ask the thing to make you a whole business plan. And I actually did play around with that for my own startup. And it rewrote my 30-page plan into a really clear 15 pages.
Yeah.
That was beautifully written.
Yeah.
So that actually scared me a bit.
Right. Yeah. I definitely messed around with it a lot. I spent a lot of time just asking it random questions. There was a couple things that I caught it was not right on. There was a couple things that it was off. So there is that part. And then I was listening to a podcast where they were trying to compare it because when this news came out, I remember I saw it and it said this is going to be a threat to Google search now because people don't need Google search. They're just going to ask the AI instead of looking through a bunch of search results. They're just going to get one answer. But the problem with that is that one answer that it gives you, if it's not 100% accurate, then that's going to cause some problems at some point. So it's going to be interesting how this plays out, what it's going to look like 5 years from now and how accurate is the answer actually going to be.
Definitely, I agree. What I was actually thinking about before this meeting was that I was thinking exactly that. A lot of the things, like when you type into Google, let's say you want an answer for something, Google will only spit out if there's like an article about that, someone else is writing about that. A lot of the times you will actually not get the answer you're looking for through Google. That has happened to me many times.
Mm-hmm.
But the artificial intelligence, it's really about knowing how to ask it the right question. And that's I feel like a lot of
you word it. Yeah.
A lot of people are not going to do that. So there is a little bit of a learning curve.
Mm-hmm.
But if you really do know how to leverage this tool, then you could really do some crazy things.
Mm-hmm.
Now, but that being said, sometimes it is wrong.
Mm-hmm.
That's why it's an emerging technology. It's not fully developed, but give it 2, 3, maybe even 5 years from now, I think it'll be something that we're going to be heavily reliant on.
Yeah, I think so too. What was the other thing? I was using it to I'm trying to come out with a second podcast right now, and so I was asking it for a bunch of different ideas for what to name the podcast. The other thing I saw was that I don't know anything about coding, but I'm pretty sure it said it can code things too, right?
Yeah. So I actually saw an article which I wish I knew about ChatGPT last semester when I was taking an SQL class. It was a nightmare for me because I personally am horrible at code like you. But I saw an article where someone was able to ask the AI to make it a trading bot. Trading bot is basically an algorithm where you set up your account and integrate it to trade a stock when it gets low enough, to short it when this happens, if then statements, to cover, to sell, to buy, whatever. I don't know if there's a derivative form for options like puts and calls, but this guy was able to ask the AI very simply 1 or 2 sentences he probably asked him, and the AI bot gave him a algorithm to trade, and he ended up getting like 1,300% from one day. So just imagine you put in $100 at 9:30 when the market opens, and you let the bot do everything. You go about your day. I don't know. You go to the bar, have a nice margarita for the entire day, and then you come back, you open your laptop at 4 p.m. when the market closes. $100 is then turned into $1,300. So just imagine just what kind of potential that could create, and also what that could also mean for the economy in the long term. That's also what's scary.
Absolutely.
Yeah, but while we're also talking about Microsoft, what this news as well, if you all didn't see, they also fired 11,000 employees. So is that like a thing for the you know how to talk is they're going to replace the robots?
Yep.
With us. How do you all feel about that?
Well, that could be a part of it, but I think it's more so just because we're going into a recession right now, because that's like the majority of companies out there, like big companies, Goldman Sachs, Facebook, everything out there, they're all firing, 10,000 plus employees. So I think that's just the way the economy is looking right now. That's why it's causing that.
I think we all saw this many years ago when customer service bots came out. The big one is like Uber and DoorDash. Elon Musk actually made a really good talk about this, but we should focus less on doing jobs that can be automated. So, for example, Uber, for example, like all those drivers, that entire option for having drivers is going to cease to exist when automated cars, autonomous cars, they become a mainstream thing, because then Uber can just control that entire thing and get more of their own market share for that. Less cost for that. But as we can automate more jobs, there needs to also be jobs created for managing these artificial intelligence bots and prevent them from going out of hand. And there are those glitches, like you said, when the artificial intelligence gives the wrong answer. Someone needs to be there, someone rational and reasonable to get in there and fix that problem.
Yeah, that's true. But
That's why I will say I think for anyone out there who's listening with kids, I don't have any kids though. I'm pretty sure none of us have kids.
yeah,
Yeah, I'm saying I think the main thing that a lot of parents should be thinking about is putting their child in some sort of coding. Like I know I'm trying to learn how to code, but I'm bad at it now. We're all bad at coding, but I think coding and other things like that nature should be
or
like the main thing.
cybersecurity.
Cybersecurity, like I'm also trying to get into.
Yes.
Yeah.
But yeah, like those type of skills, like they're more going to be needed more as we go on. Like
Well,
a lot of times we have mechanics, things like that, but I think technicians are probably going to be the most useful type of job that we will have.
mhm. Well, see, the one thing about it making mistakes right now, I think since we're such early days in this stage, I think that's going to probably get cleared up years down the road. I think 3 years or 5 years from now, there's probably not going to be that many mistakes. But what I was thinking about was like in the cases, like if it's not a big, let's say you say, okay, write me a poem, or if you say, I don't know, so you ask it a simple command that's not a very important deal. That's not a big deal if it's wrong. Like, let's say it's 90% right. That's not a big deal. But if it's for a more serious thing, like let's say you're in a courtroom or something and you're using artificial intelligence, well, then that AI needs to be 100% accurate. So it depends what the situation is. But I think over time, it'll get more accurate results and then it won't be that big of a problem.
It's actually funny. My friend and I were joking about this the other day, but just imagine when the re-election for president of the United States happens. And we were thinking, what if an artificial intelligence bot or like a computer was in charge of the entire company, free of any subjective thinking, free of influence from the ruling party, whether it be Democrats or Republicans.
Yeah.
Someone just something rather very objective just to get things done. But it's crazy. It's also scary to think about the potential that this thing can do.
I know. And a lot of people, I think I've heard Elon Musk and I've heard Kathy Wood talk about this, where they say that when technology takes over jobs, that it's supposed to create at least 1.5 times that number of jobs. So I don't know exactly what that looks like as far as after AI takes away some jobs, what jobs do we have after that? Like I know we mentioned coding jobs and stuff like that, but I mean, is that going to be the only option or is there going to be new options for jobs out there?
Yeah. So
you go first, Zane. You go.
So Josh actually mentioned this earlier, but right now we are going into a recession. And I like to think about a recession as a transfer of wealth rather than, just a bad economic time for everyone.
Yeah.
Some companies can really, really benefit from this and some markets are also going to suffer. So, as the demand for these cybersecurity and AI watching jobs increases, there's going to be a decrease in demand for, like Uber drivers, people whose jobs that can be automated. But that being said, there are going to be layoffs, especially for human labor, and also operational cuts because companies are also going to be they're not going to be able to borrow as much as they could in a bull market or in a recession-free time because, the interest rates are going up like crazy. Yeah. So the leverage they have with the banks is also going down as well. Yeah.
Now, going off of the employment thing you were talking about, I know that I think the numbers out there look like, I want to say they're, what are they, 3.5% unemployment right now. So it looks like we're pretty low, but I saw
yes.
What's that?
It is going down. And the dollar is actually going up, believe it or not.
The dollar is?
The dollar is doing really good right now.
Okay. Well, see, I saw this video.
For the unemployment rate.
Well, okay. I saw this video that was breaking down the actual numbers of it, and it said the only reason it's that low is because of the part-time jobs. They're saying that the full-time jobs are actually going down, but since part-time jobs are increasing so much, that's why it looks like unemployment's so low. So that's just another way to look at it. Because I mean, really, when you go out there, it's not like it's not like we have some great economy going on right now. Even though the unemployment numbers say that we do, it doesn't really feel that way when you go out, into the world. So.
Yeah, it's kind of weird. It's like since 2020, there's a bunch of more remote jobs now.
Yeah,
I think it is. Yeah, exactly. I think
like say during the day you have one main job, but if you have you can work at home and you can work two jobs. Like say if you have two computers, you can work your main full-time job on your main computer, then you have let's say another computer for a side job or an iPad for a side job. So it is kind of it's different now. So yeah.
It's definitely part of that new normal that COVID created back in 2020.
Yeah.
So
But-
that's just how. Sorry. Yes.
But at the same time, we see like not every company, but the big companies like Tesla, like Twitter, like Disney, those big corporations are telling the employees, hey, you guys have to come back to the office 5 days a week now, because some of those companies are struggling. You know, Twitter's a good example. Disney is a good example of companies that are struggling right now. So those CEOs are saying, okay, we need you guys back in the office, because that's probably what's going to help turn those companies around. So I don't know. Remote jobs are great for the employee, but I don't think it's always the best situation for the business.
I think it's arguable. There's employees out there, and if I was an employee, I would actually prefer to go to the office. I find that my own personal productivity goes up. But of course, there's going to be people out there that simply work better in the comfort of their own bed.
Yeah.
So
It's going to always be 50-50 split.
Right. Or
It's
hybrid. Yeah. Hybrid is also a good way to deal with that too. Yeah.
keep in mind though, like, so I'll give you an example. This was one of my internships in 2020. But what we didn't have, because it was a remote internship, was, let's say you're working in a cubicle where everyone's office is very close together. You have those very small interactions throughout the day where it's like, oh hey, like I don't know how to solve this, or hey, like I'm having a problem with this, can you just look at this for 2 seconds, or what do you think about this?
Yeah.
Or even just engagement with the employees and having that whole collaborative culture within the company. Like, that kind of lacks when you have remote jobs, because everyone's too busy doing their own thing.
Yeah, absolutely. Absolutely.
Like another example would be a mother on maternity leave. So, it's acceptable for her to work remote to focus on her child, but then her interactions with her coworkers actually goes down significantly, because her mind is going to be on what's going on at home.
Yeah.
So
that's a good point too. And the other thing I've been discovering lately is how certain industries are much more flexible with remote jobs or hybrid jobs, and some aren't. So like when I'm looking at finance jobs, it looks like that is pretty much in person only. And then if I'm going to a marketing job, it looks like they're much more flexible with that, and I'm more likely to get a hybrid or remote job with marketing.
I agree yet disagree at the same time, because there are, especially in fintech, where you can work remotely. It just depends on your position, your interaction with the employees, and exactly what kind of projects you're working on as well.
Yeah.
There are some companies out there like Twitter, there's Disney, etc. Tesla. They want the employees to come in there because that's just how the leadership puts it. Elon Musk,
Yeah.
But there's CEOs like Mark Zuckerberg and Facebook that allows the employees to work remotely. I know Jack Dorsey, before Elon took over, he really appreciated the people working remotely as long as they were comfortable and getting the work done.
Yeah, that's interesting. Yeah, so it has its time and place.
Exactly.
What I want to get into right now is, Zane, if you got something to say, go ahead. But I want to get into your experience with stock market investing.
The topic you've been wanting to hear for a while, huh?
This is Stock Talk.
So I will say this. Before I started trading, I'll give you a little history. I actually paper traded on a popular platform called MarketWatch. MarketWatch is it's through Yahoo Finance.
Oh yeah.
But it allows you to compete with friends in a pool and see who gets the highest overall return. And you're allowed just basic stuff investing to teach you. You can short sell, you can cover to buy and sell normally, you can borrow from the bank, etc. So I paper traded for 1 year. I started in August 2018, until 2019. So I saw myself making, extreme returns. Back then, Tesla was doing amazing. Nvidia was also doing amazing.
Yeah.
And then I got into the market in September of 2019. And, originally it was a bit slow. I actually lost a couple $1,000s when I started. But over time, as I learned and tried these strategies and stayed focused and, kept up with the news, there was one day where I woke up where I saw like a 300% return, and I was just like, whoa, what did I do? But then as I continued to invest, I finally figured out like the key is to really keep up with the news, to keep up in companies that you trust, companies that you see are going to be making significant returns. Two examples of this actually are going to be Tesla and Moderna back in the day.
Oh, okay.
I saw that COVID was a huge problem in 2019. I knew it would be an even bigger problem in 2020.
Wait, COVID?
COVID. Sorry, 2021. This was 2020.
Oh, okay.
So that's when I thought that Moderna would be a great company to invest in.
You were right.
And, Moderna is now mainstream. I mean, I have 2 Moderna injections inside of me. So,
And Moderna turned out being the way better investment than Pfizer.
It did.
Right?
And that's mainly because I want to say it's their trials ended up being more successful, their research, and it's also their marketing as well was also much more ahead of Pfizer at the time.
Yeah. And they're a smaller company.
Yeah, I mean Pfizer specializes in a lot of different things, so Moderna is more focused.
Yeah.
Right. So if this is like if you see a focus, something that'll be a potential problem in the market eventually, and a company that focuses directly on that problem, in this case it'd be Moderna, that will be the best investment. So that other example I was talking about was actually Tesla, and I saw that going into carbon emissions is going to be a big problem, especially for sustainability. So what was the biggest EV manufacturer back in 2018, 2019?
Yep.
It was Tesla coming up. So
it was today.
Exactly.
Now,
So
no, it'll be like that 10 years in the future too.
2025 is coming up.
No, I don't think so.
I mean, I can get about the future in a bit, but just some more storytelling was, this was back in, I think this was middle of 2020, end of 2019. But Tesla made a stock split where people who invested 5 years before that, they ended up making like a 20,000% return. Similarly to how Bitcoin was doing back then as well. But yeah, speaking of Bitcoin, other great investments that I saw, because I saw the price of Bitcoin going up, I knew that NVIDIA and graphic chip manufacturers and Micron Technologies are also going to go up. So those are all valuable investments that I picked up back in the day.
Okay, let's go back to when you started investing. I want to know what got you into investing, and then what style of investing were you doing? So that means, like, were you doing options? Were you doing day trading? Was there something that caught your attention out there that got you interested, or how did that play out?
Yeah, that's actually a nice question. More storytelling, but like I said, I had my startup idea back in 2017, and I always knew that I wasn't just going to be doing startups. I wanted something to do in the background as well, like a side hobby. So that was trading stocks. So the best way to learn that is to day trade, not just to invest. I know Warren Buffett would be angry at me to do that, and especially investing into very volatile companies. But if you do sit behind a computer screen, and there was a good 4 months when I did this. I'd wake up at 7 o'clock, have breakfast, get ready for my day, meditate for 20 minutes, and then sit down at the computer actually at 9 o'clock, reading up on the news for the first half an hour, and literally being at my computer from 9 to 9:30 to 4 o'clock when the market closed. And, I would always have CNBC on the background, Bloomberg, if I was not at my TV, just watching all the trends, the emerging technologies, and then in between trades, I would literally be reading about everything that came up, whether it be on the Wall Street Journal, The Economist, Apple News, Yahoo Finance, you name it.
So very time consuming.
Yes, but I have my choice, because it didn't feel like work for me. It was very interesting because I felt like I was keeping up with what was going on in the world. And, if you really put in the time with this to day trade for the entire day trading day, that is the best way to learn, in my opinion. Yeah, you can take courses in investments to learn the basics, but you need to apply what you learn in the textbook into actual real terms. And that's actually how I learned the most.
Let me ask you, what was your success like with that? And like, what type of returns could you expect? Because I've always heard a lot of things about most day traders.
Sorry, someone was calling me. I didn't mute my phone.
Hey, Mom.
Sorry, could you repeat your question?
Yeah. So my question is like, what type of success, what type of returns did you have with day trading, and how do you feel about the people who say that the majority of day traders are losing money out there?
Yeah, so I will say that I definitely did not expect to make as much as I did. Um, I want to say there were times where I got lucky, but it was smart luck rather. Like I knew something would happen that would trigger an event in the market to capitalize on a big bubble that was growing and growing and growing, and just knowing, I know this is gonna sound weird, but like following my instincts of when to sell before the bubble popped. I mean, there were times where I missed out on. I could have maximized my return even more if I wanted, but
Yeah.
Keeping up with the news again is going to be quintessential for this. But just the returns that, I mean, if you want like numbers, I don't want to disclose my personal numbers, but I will say that when
I mean percent wise.
Yeah, percent wise, exactly. So percent wise, it's very, very optimistic to think that you're going to double your money in a year or 2 years or whatever. The safest way to, when everyone talks about the stock market, they just say, just get SPY, just get what's on the S&P 500 benchmark, and just go with the slowly returns over 10 or 20 years. That's what Warren Buffett would say.
Yeah.
You can just buy Burke Class A, Burke Class B. But if you are willing to take the risks, without high risk, there cannot be high reward. So because of that, there was a day where I had, for example, the Tesla day when they did the split, where I had a 1,300%, it was like 1,700% in one day, which was mind-boggling. For example, there was crazy gains from Bitcoin as well. I was actually back in crypto. I held a coin for about, I bought it in December 2018, and I sold it back in, it was in the beginning of 2021 when the coin was still high. But it was just like, when it's time to sell, it's time to sell.
So, okay, how about
crazy percents you can make?
Okay, so how about today, after you had some years of experience, what would you say is the better way to invest your money into the stock market, short term or long term?
So right now, this is actually personal opinion. I've actually shifted from a day trade strategy to more of a week trade strategy. And what I mean by that is I will still do, I want to say average 10 trades a week now. But there are some days where I'll make like 3 trades, 4 trades a day. And then there are some days where I'll just leave it completely alone to not touch it. That's kind of like how in my opinion, that's most option traders are like that. But, I've always stuck to regular buying and selling. My best friend is short selling and cover to buy. But right now I'm also in a very, very busy time in my life where, it's very difficult to sit from 9:30 to 4 p.m. and stare at the screen when there's so many different things going on.
Yeah.
So,
right. Now, where are you at in your schooling too?
Yeah, so I'm just finishing up my Master's of Finance in Boston, and I should be done by April. And the plan is to learn a little bit more about ESG and consulting so that I can work on my startup on the back, and then when it becomes ready to make that a full-time thing, then I can pivot from that, working for someone to working for myself.
Yeah.
But at the same time, I think I highly recommend every single person should do this, is setting up passive income streams, whether it be through, investing into stocks, whether it be through drop shipping, whether it be through real estate, Airbnb, private equity, etc. Because this is what's going to get you to fund more opportunities in your life.
Yeah.
Very true. Very true. But you talked about cryptocurrency, so I kind of want to use this as a segue for our next topic. So it's been about 2-3 months since the FTX fiasco that's been going on. So in your opinion, for this year, for the next 2024, the years that's coming by as well, how do you think the FTX stuff has affected cryptocurrency as a whole?
I think the FTX thing, I like to match it with Terra Luna. back in the summer.
I remember that. Yeah.
So when Terra Luna went to zero, essentially, it really turned a lot of heads because at that point, the big coins, Bitcoin, Ethereum, Solana, all these big coins, they're already going. They already popped the bubble there, and then people were like, "Oh, we should all invest into Terra Luna," and then Luna Coin completely gets destroyed, and they're like, "Huh, this market can really change overnight.
Yeah.
Billions of dollars can go to zero." So that's kind of the thing about FTX and SBF as well, or who led his investors astray, and that's why he faced all these criminal charges. But I think he was able to get out with the bond pay.
Mm-hmm.
Is
he going to jail?
I believe he went on trial and was able to pay his bail through bonds.
Oh.
Yeah, so the trial's not over yet.
No, he's still going, but I believe it was like a $250,000 bond that he paid through some sort of funding. So I think it was like real estate or something. I'd actually not read too much about that, as I've not been keeping up with crypto news recently. Personally, I think cryptocurrency right now is something that it's too unpredictable to touch. Me, myself, I used to be in it. I used to be a huge advocate, but I'm completely out of that right now. However, I do see potential for it to come back. I think that having a digital currency is definitely a safe alternative for some of it's a way to hedge against some of the macroeconomic factors. But right now there's too many regulations from the Federal Reserve. There's too many regulations on the technology side, the ESG side, where there's too many different factors that go up and down. There's also a lot of big hyping going on from like Reddit, like Wall Street Bets.
Shout out to Wall Street Bets.
A lot of this meme stuff, that will make like GameStop and ANC like really, really good. Yeah. That is giving this really volatile hype. So that needs to clear out first.
Yeah, and that's what I think Josh, I think we talked about that last episode was like, for some people, why would you want to put your money in some stocks or whatever equities out there that yes, you can make a little bit more money with them in the long term, but in the near future, let's say for the next 12 months, it's kind of unpredictable right now. So we don't know, how long is the recession going to last? How long is it going to be? What companies are going to suffer the most? And when you have a super high interest rate, or not super high, but higher than normal interest rate like we have right now, for example, Robinhood is paying 4% interest on the money that you just have sitting in your cash balance in your account. So the last couple of days, I've actually been selling like some positions that I'm just up, 10% or whatever on. Like I sold out of Wynn Resorts this past.
I was thinking about selling Wynn. That's so funny. When I saw Wynn, I said I wanted to sell it because I'm thinking about selling.
Yeah, because it went from $50 to $100. So I'm like, okay, it's had enough of a run to where I'm comfortable selling out, putting it into the cash balance, and I'm going to earn 4% interest. They pay you monthly. So, I'm happy with doing that. And I think a lot of other investors are the same.
Personally, like I said, it's sticking with the technologies and the companies you trust are going to be your biggest gainers. Right now, actually a company that has caught my eye has been Bed Bath & Beyond.
Oh, okay.
They were actually filed for bankruptcy recently.
Yeah, they did. Yeah.
Nearly filed for bankruptcy, and then all of a sudden they are making talks for an acquisition, and the stock goes up. The stock goes up like
meaning like another company would buy them out.
Yes, I forgot which company it was, but it was some home articles company. That was.
I can picture like Target buying them out.
It's something like Target, but it wasn't Target.
Walmart.
But like you need to look at that. I consider Bed Bath & Beyond right now like a meme stock.
Yeah, it is. Yeah.
But
great store though.
Some stuff that I would recommend actually purchasing for this year are going to be Micron, the chip manufacturer. Nvidia is going to be another big one. Tesla. Having your basket of blue chips, especially with the AI. Actually anything with AI is going to be a big one in 2023 and then actually in subsequent years. I do see the return of crypto in 2024, if not in 2023. It really all depends on how these policies with the Federal Reserve can go. Other companies are going to be some smaller companies, like not smaller companies, but like electronic focused, a lot of tech. There's other companies too, like IP, paper manufacturers, smaller companies. Everyday good companies are going to be good as well.
Mm-hmm. Yeah.
Actually, I can actually pull up my watch list and I can share even more. And if you guys want, I would be happy to. I can publish my watch list, and you can add it to the description of this video.
Oh,
That's
we
a
would
good
love
idea.
that. We would love that.
Okay,
But yeah,
Josh, what?
stocks too. I was saying, Taiwan is up big. You see that? Taiwan's
Yeah.
up. Yeah. So there's a lot of
Yeah,
stuff.
I would love to own that stock, but I would not buy it anywhere near $85 a share. I would not buy it. I think it's too. I think it's got everything baked into it. I don't think there's much room for it to run. In the long term, there is, but in the short term, I think it's priced in.
Yeah, I didn't buy it in like the December-ish. Would have been better.
Yeah, when it was, I mean, I remember looking at it when it was $65, but every other stock in the market was down huge too. So it was like, you got 100 plus stocks you could get on sale, but it's like, which ones are you going to choose? So,
I mean, it's the same reasoning. It's like buying brick A versus buying brick B if they have a different class. If the return is going to be good and safe, there are ways where you can still purchase that stock. And actually, when I think about this, it actually reminds me of Bitcoin, for example, where you can buy how much money of a Bitcoin you want versus buying the actual coin itself.
yeah.
Actually, there is one thing I actually wanted to talk about, was something about cryptocurrency, and that's shorting the market in the crypto market. And the reason why you can't actually do that is because if you short the market, there needs to be someone on the other side betting against your bet to do that. So right now, because that doesn't exist, we can still leverage that in the stock market through the form of ETFs.
Yeah, right. Actually, you know what? I just bought one, I think yesterday. This isn't crypto related, but it's a ETF type of fund where it shorts the Dow. And because that's the reason. The reasoning for that is because if you look at the Dow stocks, especially compared to the NASDAQ stocks, the Dow stocks have had like much better years, or a much better year than the NASDAQ stocks. So if you look at McDonald's, if you look at Coca-Cola, Home Depot,
well, keep in mind
those type of companies. What's that?
Keep in mind the Dow is also many different industries. It's not just technology, which is what the NASDAQ primarily focuses on.
Okay, that's a good point. But I think that the Dow has not been hit. I think there's a good chance the Dow stocks will fall. And I think that since the NASDAQ, I understand there are different industries, but normally the NASDAQ and the Dow should not be so far apart. Like right now, so the NASDAQ is down like 30% from its highs almost. The Dow is only down like 10%. So I think that range needs to come a little bit closer, and then things will balance out.
I really think it depends on what's going to happen in the market, and what emerging technologies are going to come out. I think that the hit the NASDAQ is taking is actually closely tied to a lot of these big unemployment layoffs, and their ability to do less R&D in the technology sector. Like Coca-Cola and Pepsi, they don't really need to do much. They just need to keep up their niche, keep up marketing. Same with McDonald's, same with like Home Depot, IP. But as you have like these companies like Tesla, like Twitter, like Moderna, even, and they need what's the word for this? They need to be able to take out like constant money for R&D, to keep on improving. Yeah. No one's going to buy their products. Their products are going to go obsolete. Yeah. So
it's kind of like they need like a ceiling, kind of. But not really ceiling, but the opposite of ceiling.
They need a catalyst or a cash flow to come in and push the technology further. Yeah.
Exactly. And if it's hard to get funding from banks, especially with higher interest rates, their room for opportunity gets slowed down to the point where they need to lay off more and more employees.
Yeah. Now, what's interesting is so this I think a little over a week ago, I went back and I bought some more Tesla shares, and that's because I think I bought them at 120 bucks a share, and I think that Tesla's stock is going to go back to $300 a share at some point.
Unless they do a split again, because they're known to do a ton of splits.
I know, yeah. But I think the reason that it's starting to, I think Tesla stock hit because it bottomed at like $100, and I think it hit like 140 this week. And I think the main reason it started moving up again is because ever since Tesla dropped the prices of their cars, and then all that, I think the news came out that the demand for their cars was surging. I think that was the main reason the stock has been moving up lately. So I don't know. I'm telling you, I think the demand for Tesla's cars are just, it's one of a kind. I don't really see any competitors having similar numbers as them.
Tesla is definitely becoming known as like the iPhone of cars, you know?
Yeah.
So for example, like, I know there are some people that would love to have a Samsung or even a flip phone or a Nokia that doesn't break, but you know, there's a lot of branding that's going on with their niche that I feel like Tesla is going to become. That's why, like, you know, people are not going to prefer like Audi making their own electric cars, or even like a Chinese startup like NIO is you know, making their own cars. But
see, that's what I think is the big problem going on with Tesla. Well, their competition. What if people start want to buy a BMW that's electric?
It's possible.
I mean, the thing is Tesla has created its own reputation for its cars, but you know, there is going to be eventually, like, Lamborghini is going to make a really high-end luxury electric EV.
Exactly.
Their line, you know, Porsche is going to do that same thing. You know, all these luxury car brands are going to do that, and they're going to have a market appealing to the ultra high net worth. But Tesla, however, you know, you can buy a Tesla. I think is what the starting price is, like $50,000, which is like the same price as like a Mercedes C-Class.
Yeah.
But you know, like it's completely electric. You have all the fancy gadgets in your car. You have an iPad where you can watch Netflix and just let your car drive for you.
Yeah.
So, you know, there's a lot more R&D that needs to be done. But you know, when Tesla originally came out, a lot of people were so scared at the fact that, you know, what if I am driving from California to New York and there's no charging stations on the way? Where the heck am I going to charge my car on the way? But now, because that's become mainstream, everyone is flocking towards Tesla, and that's becoming the new craze.
And the other thing is, before Tesla became a famous stock out there, because I remember when I was buying Tesla shares originally, the word on the street was like Morgan Stanley would come out and say, okay, our price target for Tesla stock is $10. We believe this company is not going to have positive cash flow. And that was mainly because that they were spending tens of billions of dollars building out these facilities so that they can manufacture or mass manufacture like the Model 3, the Model Y. And that's something that Tesla got over that hurdle. And that's what allowed them to come to this huge stage of profitability where they can make, you know, billions and billions of dollars of profit. If you go ahead and look at it, we're already starting to see it, because since companies like Ford and GM have already started investing all that money into their facilities, that is hurting their cash flow substantially. If you look at their cash flow statements, they're normally making tens of billions of dollars of free cash flow, and it's down to like $2 billion now, because all that money is going into the investment. So that's something else that the competitors are going to have to get themselves over, that Tesla's already has all that out of the way. They already have all that stuff built out, and now it's just more and more profitability as we go further into the future.
Well, it's not only that, but also with I think the car industry as a whole is kind of weird now. Like if you bought a car in 2018, you paid 26 some odd thousand for it. You can sell that car. Well, how much mileage you got for around $24,000 now? So that's kind of unheard of.
Okay, that's what's interesting. I just saw something that said people are investing in Teslas right now because the prices are. I think if you buy a Model Y, I want to say, I think they dropped the price by close to $20,000. It's at least $10,000, but I think it's close to $20,000. So if you get the Tesla right now, there's a good chance that when demand goes back up, that they're going to raise the prices again, and you're going to be able to flip that Tesla for a profit. So
yeah, I think a big thing, especially with the EV market and everyone going there, is the price for a barrel of oil has been going up crazily. I mean, when I was in San Francisco last year, I saw some gas stations where it would be $6-7 a gallon. Yeah. So just imagine charging your car is probably like, you know, a few percent of like what you would spend in gas in a year.
Yeah.
So over time you break even with an electric vehicle, which is why all these people, they're going to Tesla, the most known manufacturer of EV, the
Now,
safest,
but
rather, you know.
the interesting thing there though is the battery, because yes, you're saving money on gas, but are you going to be able to? Is it a smart idea financially when you have to replace that battery? And I think it costs $30,000 to replace the battery. I believe it lasts. I believe the average duration of the average battery life is about 8 years. So you also got to factor that into the equation there.
That and other type of problems that might happen with the car. Because for some cars you can go to a mechanic down the street.
Yeah,
Maybe you need your brakes fixed instead of going to dealership. But with
yeah.
Teslas, it's kind of you got to go.
Tesla,
Because,
I think Tesla sends people to your house though to work on
yeah,
the car,
yeah.
you know.
But if you are in the middle of the road, that can be a huge problem.
What's that?
I mean, if you are in the middle of the road, that's going to be a huge problem. You can't just
Then
call
you're screwed.
Tesla roadside assistance, but they are
Yeah.
going to have that.
Yeah.
But it's one of those things where the technology does need to become more mainstream, because yes, it is still being improved, and then when that happens, they're able to manufacture these materials for less, and that becomes another incentive for consumers to switch over to this. But a company that actually specializes in the battery swapping technology and making it more modular is NIO, the Chinese EV startup. But basically, what is their advantage in the market over Tesla is easily swappable battery plans, like a subscription service rather, where they can easily just do that, not pay $30,000. But 8 years for a Tesla battery is a long time. I think it really comes down to how much is the person driving. So if a person is not driving that much, and there aren't this will happen, I think by 2035, that carbon emission companies are not allowed to make more cars like that. It has to be all EV.
Yeah.
But if you're not driving that much, then you're fine spending $5, $6, $7 a gallon for of gas. Then okay, sure, go for that. Let's say you want to drive. Let's say you want to bust out that antique car that costs millions and millions of dollars that makes the engine go vroom vroom.
Yeah.
Then all power to you. It really depends on your preferences.
Mhm.
However, right now, because the price of oil is very high, I think that EV, for now at least, is the more cost efficient option.
Do you know what a barrel of oil is trading at right now?
I think it was about 80, I'd say.
It is. Let me see here.
His gas has definitely.
You're right. You're right. It's 80, about 80, 81. Yeah.
81.
Okay, well, so that's not as bad as it was earlier last year. I think it went to like 110.
When there was a lot of turmoil going on in the Middle East, these factors can really make the price of the oil go up like crazy.
Mm-hmm.
I think right now with the whole conflict in Eastern Europe, that's another.
Yeah, it's gonna be another one in the next couple of months. Looks like
there's been unfortunately there's been some real. It's getting worse actually now, and a lot of suspicion and uncertainty is surrounding that area right now. But if the price of oil starts to go back down, let's say EV makes a huge development and a lot of people are going towards the electric alternative, then the price of oil will actually start to go down, and the people that have gas powered cars are actually going to profit off that and save more money. Which I mean it kind of stinks thinking about that, but eventually there's going to be a huge surge in demand for electricity powered.
Yeah. And how you mentioned, like the whole thing with like the regulators and like this, like the state of California saying, oh, we're banning the sale of gas vehicles by 2030 and all that. That's like really extreme stuff that is going to put pressure on the industry to go towards that way too.
Mm-hmm. I think it's for the best. I mean, I've done quite a bit of research into ESG and sustainability, and it's something that we need to. This may sound horrible, but we need to stick our necks out together and make change together. Because if we just say like, "Oh, we're gonna introduce this new initiative," and the progress is gonna be super slow, the market needs to inflate, pop, and then rebuild. That's kind of like the best and most quick way we can implement a sustainable green world. And if we do that, then the in the long term, the very long term, 50 years from now, it's really going to pay off.
Yeah.
But we have been doing well recently with sustainability. The ozone layer actually is starting to recover. Gas emissions, methane gas emissions especially, have decreased. So give it 5, 10 years, 20 years, the ozone will be back to normal and global warming will be a thing of the past, hopefully.
That's interesting.
So then hopefully Boston will get some more snow and we'll get normal seasons.
Oh yeah.
That's funny.
But yeah, I think just in terms of what's coming out in the next few years, this whole concept of having sustainability, this possibility of a recession, these emerging technologies, they're all moving in a good way. I feel like maybe right now the market may seem very uncertain and bad, but the bubble has been growing in the last few years, and right now the Fed is doing everything it can to stop the bubble from inflating. But
okay, I have an interesting question for you. Let me ask you, like, okay, you know how sometimes, with certain technologies that come out there, whether it's the internet or whether it's like crypto, whatever it is, sometimes those technologies are just like fads, right? And they have a hype cycle and they get popular just for a certain amount of months, maybe a year. And then sometimes, if we're talking about Microsoft and the internet, that those technologies go on for decades and they keep evolving and they're here to stay. Out of the technologies we talked about so far today, like EVs, crypto, whatever else, AI, which ones do you think are here to stay and which ones do you think are just fads?
So with all these new emerging technologies, they all go through what's called a technology adoption cycle.
Yeah.
They're going to have the first people taking on the new technology, trying it out, telling their friends of friends, and slowly by slowly, you have people that are willing to put in more money and trust into it, and the technology develops more and more and more. But what technologies I think will be here to stay. Well, sustainability is going to be a big one. Crypto, I think, can come back in the future. It's supposed to be a hedge against macroeconomic policies, and this may also sound crazy, but as we progress into space exploration, and let's say we end up colonizing, let's say we end up colonizing Mars, what's going to be the currency for that? So, we need these options open.
It's gonna be a gold mine for whoever figures out that space stuff.
Yeah, maybe we might have like Martian rocks that are mined into like a new substance, a new.
I know.
Chemical. But there's going to be all these technologies. I think can be there to stay if they are executed right, and there isn't more like FTX meltdowns or Terra Luna crashes, and then uncertainty and whatnot. But like right now there is just too much uncertainty, mainly because of the recession happening, and because of that, companies are suffering. People are getting laid off. The housing market is going all over the place. Some days it's good, some days it's bad. So when this bubble just stops going, like right now it's already big and it's just going up and down like this, it needs to pop and then rebuild from there. And another thing that happened is just the policies that I don't want to get into too much of politics. I call myself an independent. I don't care who's in charge. But there's been a lot of spending by the House and by the office and the wing, the president. But as Congress is passing all these spending bills of trillions and trillions of dollars, our debt is just going up and up and up and up, and like there's no way to reverse that act.
Yeah.
Yeah. Well,
you guys heard about today that the debt ceiling has been reached for the United States, $31.4 trillion.
Yeah, I was say I like the word ceiling because it seems like they change the ceiling every time they get to it.
I know, right?
Yeah, but if this ceiling is not, let's say that we default on all of our payments, what's going to happen is we're going to probably enter not just a recession but a Great Depression. Probably.
Yeah, even worse. Yeah,
even worse. There's some numbers we haven't seen since the World Wars. So I feel like that's why the Fed is doing everything they can to avoid the bubble from popping, because it could be completely catastrophic.